Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 16th of September, 2021. Thank you for tuning in. Now, listen, I have never seen, well, it's kind of like this. Picture if some sort of a explosion went off. You know how it throws things way up into the sky, right? What do they do after that? What are the things that get thrown up into the sky? They come down, they fall. That's what this is like. It's like been an explosion of money when the Fed, during this COVID crisis, the early stages of it, when they released all those stimulus packages and stimulus checks and everything else. But not just the Fed. All of the central banks did the same thing. They all followed suit. Well, now they're all following suit and tightening up. And they're tightening into when the explosion is falling. So what we're looking at is a very rapidly increasing deflation within the system. Now, I know you hear all these other guys out there just preaching right now, inflation, inflation, inflation. But right now, they're behind the curve because all this has happened so fast. I'm a little bit ahead of them. And seeing this deflation that's already begun. It's beginning. It's acting as disinflation. Because an awful lot of these things, like especially the things you really need, like food products and everything else, are going up right now. They're still going up. But now the implosion's beginning. The whole thing's starting to fall very rapidly, And we got Evergreen over there in China, this big developing corporation, development. What they do is they build houses and they build skyscrapers and apartment buildings, and they sell wealth management products, which is basically you invest in them and they pay you a high rate of return on interest in a wealth management products, like borrowing them money. And they put that into construction projects and things like that. Well, that's collapsing over there in China. And what it's doing is it's very similar to what happened to the United States back in 2008 in the real estate crisis. Now, it's arguable because the Chinese economy, the two biggest economies on earth, the United States and China has become a tremendous economy, huge economy. And we have a Lehman moment actually happening over in China right now. And that's increasing the rate of deflation, along with the Fed talking about tapering. I don't think they're going to get the taper. I don't think we're going to get there. I think this whole thing's going to fold over and fall. Very soon, guys. The deflation moves fast in the system. It moves faster than inflation. It takes a lot of propping up to get the inflation. Like the Fed has a 2% inflation target. It takes a lot of propping up of the system to get there. It's a slow process. It takes a lot of money injections and everything. But deflation can happen overnight. They do have tools to fight deflation, better tools than they have to fight inflation. But in order to use those tools now at this point, they would hyperinflate the system, hyperinflate and destroy the currencies. So, we got a situation happening on the ground here. Let's get in there and take a look at the markets now. Let's open up the charts right here and take a look. Silver price is down $1, $1.01. It's a huge move down for silver. It's been falling all morning like a knife. People are going to get this. This is what makes the silver market and gold market so that people don't want to invest. Is when they see things like this happening. But, if we do get a massive deflation, there's a couple questions that are going to come to mind. One question is when are the central banks going to change monetary policy again and become dovish? Deflation doesn't know where to stop. It can tear the system to pieces. In fact, it can freeze the system. They're playing a very dangerous game right now. Because of the computer age, trades are done so fast across the internet, And when you get big corporations and stuff start to go bankrupt, they have collateral damage that affects other large corporations and stuff. In other words, the financial system now is all linked together. So we got Evergreen or Everclear or whatever it's called over there in China, you know, going down right now. Evergrande, that's what it's called, Evergrande, going down over there in China right now. The thing about it is that's a $305 billion corporation. We don't know what the collateral effects of that's going to be yet as they go down. But one of the things that I can tell you right now is they're a real estate developer. They are a property builder. They build houses and they build residential and commercial real estate and everything else. There's going to be a lot of properties on the list that belong to that company. They need cash. There's cash strapped right now. Okay, they're going to be selling those properties, probably at fire wholesale discount prices. How does that affect the rest of the property market in China? In a very, very negative way. That's one of the spillover effects, you know. But other spillover effects is what other corporations in China and land companies that sell properties and things. The Chinese property market has been raging hot for years now. It's one of the biggest bubbles on earth. We're going to have to wait and see, like I say, about Evergrande, but I'm going to tell you guys what. This could be the trigger or a black swan that people are not really expecting right now. If the Chinese real estate market, which is one of the biggest in the world, starts to roll over. This is a very strong deflationary signal for the entire world economy. Our stock market over here. And our real estate markets. I'm telling you, here in Canada, the area around Toronto and around places like the real estate is unbelievably high. It's all ready to pop. The whole system is ready to pop. That's why I say it's a dangerous game. Basically, what we're doing is we're stepping stepping into an elevator shaft with this deflation. And can the Fed stop the elevator from crashing into the ground floor? That's the thing. Can they put the brakes on it? Because this thing could happen so fast in a matter of weeks. It can all go down in a matter of weeks. Where it took years to go up, it can all go down in a matter of weeks. And what would happen if the Fed doesn't step in time with deflation? The system will freeze. So right now, we're risking a system freeze, a system-wide, worldwide financial system freeze. That's what we're risking. And if that were to happen, the amount of liquidity that they'd have to generate, the central banks on Earth, to unlock the system again and get it moving again, if it freezes, would be off the charts. I don't know what it would take, maybe $20 trillion, I don't know. Just a quick estimate by the world central banks in order to unlock the system. And then the problem is, as soon as they unlock the system then, and starts to get up and running again, it's going to hyperinflate. The currencies will very rapidly become worthless. People would then have lost confidence. So what do they do then at that point if the system freezes? Leave it frozen? Because everything runs on money, and if the financial system is frozen, nothing's going to work. Your credit cards won't work. Your debit cards won't work. Your bank will be closed. That's what we're talking about here, a system-wide freeze. Nobody will be able to make pay. None of these companies, doesn't matter what they are, trucking companies won't be able to make pay. They use the banks to be able to pay to be able to pay for fuel and everything else. The whole system will actually stop. And then in that kind of a crisis, the clock would be ticking. They would only have a couple weeks to unfreeze the system before the system would entirely melt down into nothing but chaos, and then they can't unlock it anymore. It's over. That's what they're risking with deflation. That's what almost happened in 2008. And now we're 4 times over leveraged more than we were in 2008. If the system locks up like that, they've got a couple weeks. They can go a bank holiday or whatever, and then they can fix it. But the problem with fixing it is, it's only one way they can fix it. They got to print a heck of a massive amount of money and bail everybody out all over again. All these over-leveraged corporations and everything. And, you know, deflation can do that. That's why it's so dangerous. We're such a dangerous place right now. When you got the Fed talking about tapering into this weakness right now, and you've got a United States government that has a debt ceiling coming up, and they're not doing a damn thing about it, and that means that they could default. And what are they doing? That's locked up. People out there, you know, on the street, your friends, your neighbors and everything, they don't realize the danger right now. They think everything's hunky-dory, everything's great. Do you guys realize the danger right now that we're in? From the financial system. The financial system can be more dangerous than almost any pandemic. This is a bigger danger to the whole world. Because everything runs on what we call money, which is actually not even money. Okay, guys, listen, let's move on here. We got a silver price of $22.79. And we got a gold price of $17.56. Boy, they've really been creamed, you know. But I'm going to tell you guys what. Even in a deflation, if the deflation gets really bad and the real fear starts to come, and the system does start to lock up or something, this is going to go exponential straight up. Gold and silver will go straight up. And I mean, you could see silver gain $3 in one day. You could see gold go up $200 in a day. Under the right circumstances. If it's a fear trade. Because this is the only real safe haven asset out there. It's on sale yet again. Okay, it's kind of depressing if you're a holder, you know, but if you're a buyer, this is good news for you, you know. You can get in there, and this is the real contrarian trade right here. If you're a contrarian, this is the real contrarian trade. It's the only thing that the prices went down on when the price is going up on everything else. And it's the only thing behind the whole financial system that has real rock-solid stability. It's amazing. Let's take a look at crypto today. This stuff could take a tremendous beating if we start to deflate. But what it would create is a buying opportunity. Because if the Bitcoin price and the crypto's price gets knocked down during some sort of a deflationary episode, what's on the other side of that? I mean, I've just told you guys about the system freezing. Okay, say the system locks up and freezes. Do you really think the central banks are just going to sit there and say, okay, basically everything in the systems practically went bankrupt. That's why it's frozen. We're just going to leave it that way, and we're just going to we'll lose power, and the world will devolve into chaos, you know? But we're just going to leave it like that? No, they'll have a panic on. They'll have panic meetings or whatever, and gosh knows what they'll do. But they'll fix it. Because they have to fix it. It's one of those things where it's like in your life, you know, if you only got one car and that car breaks, you're pretty much obliged to fix the darn thing. Otherwise, you're not going to get to work. You know, and even if you're not a mechanic, you know, and you can't afford to take it to a mechanic, you'll buy the parts at a local store and you'll fix it. Because you have to fix it. And that's the way with this, with the central banks. They would have to fix it. They'd have to have emergency meetings because it would create a situation. See, right now there's no situation. They can talk the talk. Taper, taper, taper. Talk all about it. You know, how we're going to do this and we're going to do that. There's no panic. There's no crisis. You got to wait for the crisis to occur before they'll react and they'll fix it. And when they fix it, then we're going right into the hyperinflation. Okay, let's take a look now at Bitcoin price, $47,734. What's the floor for Bitcoin, guys? They could go down to zero. Yeah, that's the floor, you know. There is no real floor for these asset classes, but what's the... So the downside potential is all. Your downside potential risk is all. Your upside potential risk is just equally, it could be all too. You could gain all. So Bitcoin is on a move, it's on a tear to try to become the be-all and end-all of money in the whole world. That's what it's trying to do. Ray Dalio, come on, there. Like, I was listening to him yesterday, and he was saying that Bitcoin's going to grow huge, and then they're going to kill it. They're going to destroy it. There's a problem with that. If Bitcoin gets too big, it becomes too big to fail within the financial system. I don't think Ray Dalio's taken that into consideration. The too big to fail thing, you know. Anyway, let's take a look now at the Dow Jones Industrial Average. It's down 211 points, 34,603, and this doesn't surprise me a bit because this deflation is coming in here really fast into the system right now. And yeah, that's right, you're still seeing prices go up on food and things like that, but you're going to see a turnaround. We got all kinds of ships out there in the ports right now, like in California and stuff, waiting to dock and waiting to unload cargo. Into a deflating economy. People are out of money. No more stimmy checks anymore to buy all this garbage. And so don't be surprised if you start to see markdowns start to occur on the items that you don't really need. Like food could still be going up. At the same time, we could be seeing markdowns on some of the things that you buy on Amazon. Because the container ships get unloaded, they get all this new merchandise, and nobody's buying it because everybody is become suddenly tight with their money. That's what we got going on right now. Let's take a look now at crude oil, 71.87. It's down 74 cents on the day. Move index today, 53.93. Like I say, all these other guys out there right now are all inflation, inflation, inflation. Now, do you guys remember back? Go back about a year or so, or a year and a half ago. And they were all talking deflation on here, saying the stock market's going to drop by 80% and everything. Deflation, deflation, deflation is all you guys heard, right? On YouTube. And I was out here saying the exact opposite. We're going to have a recovery, I was saying. Prices are going to go up. We're going to move into inflation, I was saying. While all of them were saying deflation. Now it's just the opposite. All of them are saying inflation, inflation, inflation. And I'm saying, hold on, wait a minute, guys. We're going into deflation right now. That's what I'm telling you guys. It's going to be very short-lived, this deflation. It's not going to be a long thing because it's going to move so fast. It's going to move really, really fast. It's already begun to move. Crashes are in the works. I can just see them coming. I don't think we're going to get through October into November. And then the Fed, you know, all this talk about them tapering. Let's see them talk about tapering when the stock market is down 5,000 points. Let's see if they're still doing taper talk. Let's just see if they're still doing taper talk when the stock market goes down that much. Bonds and rates today. We're looking at the bond yields rising today. 2.5 basis points on the U.S. 10-year at 1.32. And the U.S. 30-year is 1.87, and it's risen 1 basis point. And now let's finish off and take a look at the U.S. dollar index at 92.92, and it's rising. Now, this doesn't surprise me that the dollar's rising Even though it's rising against other currencies that are crap, still it's rising. It's rising because people right now are trying. What a lot of people are probably getting into cash. People in the know that can see what's happening right now in the system, they're probably pulling out into cash. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.